Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, good morning. Welcome back to another live stream. Hope you're doing well. And markets are moving once more. And I hope, what do we got? 193 people here. As we get started, do me a big favor, hit the thumbs up button, subscribe, all the YouTube stuff, all the Twitter stuff. We're streaming to both YouTube and Twitter right now. And do me a favor, comment where you are tuning in from. South Africa, kicking us off. Nice to see you. Thank you for being here. Let's take a little bit of a pulse check on the market here. You've got the S&P 500. Let me pull up my editing pin here. Got the S&P 500 just above its previous all-time high. We had a record closing high yesterday for the S&P 500. Still hovering right around that area. Have not given back much of those gains. Looking really strong. By the way, we got Pennsylvania, 2 Pennsylvania people. Qatar, Jersey, Botswana, Jamaica, Montana, Utah, New York City, Ukraine, Europe, Philippines, Pakistan, England, Portugal. Wow, California. We got a little bit of everybody in the house today. Thanks for being here and hope you're doing well. This morning we do have some economic data. We have some PMI numbers. We have flash PMI numbers coming out of the US. This morning, we also had UK and European numbers, came in a little upbeat compared to forecasts. Let's just go through some of those charts here. I don't know if you guys saw this, but the euro and the pound both showing some strength here this morning. So you had French numbers, German numbers, and UK numbers as well. Manufacturing PMI for Europe overall coming in 46.1, higher than expected. Manufacturing came in higher than expected for Germany, and manufacturing for France also coming in higher than expected. At the same time, you have PMI numbers for services coming in better than expected for Germany, and then also slightly worse than expected for France. Overall, flash services PMI out of Europe came in line with expectations. And then for the UK, some strong numbers. Services PMI coming in 51.2. We could take a quick look at the pound and the euro here in retrospect to this. Here's the euro, a little bit of a stronger move higher here this morning. Perhaps a little bit of a revival in terms of European economic data. It's been a pretty rough ride for European and PMIs out of Europe have been a little bit slow. So a little bit of strength coming into this picture. And, I still remain mostly bearish on the euro, but price action seems to at least have found a bottom in the short run. For those who are watching the euro, I would be interested to see if we're actually going to get kind of a more sustainable breakout pretty soon. You've got some levels here that might be interesting. Here's this kind of longer term trend line that we're watching on the euro. Testing that here today should be interesting. I mean, you do have US PMI numbers coming out in just about 20 minutes. So that could act to either, if US PMI numbers are strong, could take a little bit out of this picture, specifically on the euro against the US dollar cross. But if US numbers disappoint in any way, euro may head up to test 1.06. So we'll see. Sorry, I'm yawning. I get up really early now because I live a little further away from my work. So I get up at 2 a.m. Just kidding. I get up 5:30, 6 o'clock, just depends on the day. But and then I drive in and, get my stuff started for the day. So my days are a little earlier. I'm going to bed really early too. So I'm like an old man nowadays. Anyways, the euro looks pretty good, at least for a retracement here. I'm gonna actually check the EdgeFinder's reading for the euro. So we have on the list of bearish readings here, Euro USD is getting a neutral reading. So this would probably not be a trade for me. However, let's go look at the pound. The pound is getting a very bearish reading on the EdgeFinder. So let's pull up the pound. And the pound might actually be interesting today. Ooh, this is actually quite the interesting setup. Check this out. So the pound against the US dollar is retracing up into kind of this longer term downward trend line that we see on the daily chart. I don't always love trend lines, but this is a pretty clean trend line. Well, why I say that is because trend lines off the daily chart, a lot of people look at the daily chart, right? A lot of investors look at the daily chart. So when you look at the pound on the daily chart, we've come back here, we've made our way back to this trend line a couple different times. Each time we've done that, price action has kind of followed through to the downside. The question is, are we going to see a breakout to the opposite direction or a reversal here? What I'd personally like to see here to potentially initiate a sell position or a short position on the British pound would be a long wick off the top of this candle. I don't even necessarily have to see that, but I would just be interested. I already have a US dollar long position currently. So for me to add pound dollar, I'd like to watch how this candle is reacting to this trend line. Right now, it looks pretty good. In fact, I don't hate the idea of a possible short position on the pound against the US dollar. Depending on how you draw this fib, you're probably getting a 38.2. Actually, almost a 50% retracement. Look, I don't hate this idea, actually. I like the idea of potentially getting short the pound against the dollar here. The question is, do I just want to play the dollar? I actually can do that through an ETF, UUP. It is accessible on my stock brokerage account, so I might even take a trade on UUP, which is a dollar index bullish ETF. I could also trade FXB is what it is, British pound. But yeah, so I mean, pound dollar looking kind of interesting. Pound dollar wick to the 200 SMA in the 1 hour time frame. Interesting. Pound dollar, again, getting a pretty strong reading here. So this might actually be a position I take. Very possible I will take that trade. What do you think about pound yen short positions with the Bank of Japan hiking rates? Let's look. Is pound yen a bearish reading? I think it might be. Yes, it is. Look at this. Pound yen getting a minus 16 on the EdgeFinder. That is a very, very strong reading. And it's been there for a while. How is pound yen doing? It's actually up here today, but has been fallen recently. What we can do, this is an EdgeFinder trick. If you are trying it out, by the way, I haven't mentioned it today. If you guys are not trying the EdgeFinder, let me give you a fair warning, because today is the last day that we'll be live streaming and sharing information about this. If anybody has not gotten your free EdgeFinder access, the EdgeFinder is free to use to everyone on the internet until Monday. So fair warning, this is your last chance. We do not usually do free trials for the EdgeFinder. Usually trials cost a small amount of money for 30 days access to the tool. Right now, we're doing a special event where you can get access to the EdgeFinder completely for free. It takes 2 seconds to get your access. Fill out your email. Yes, we will probably add you. Well, actually, we will definitely add you to our email marketing campaigns, but you can opt out at any time. And in exchange for doing that, we will send you a copy of the EdgeFinder to use for free, which will be accessible until Monday. So do not miss your chance. take advantage. Definitely try it out. But I want to show you a cool trick. With the EdgeFinder, I encourage you to do this. If you are trying it out this week, try out, if it will load, the EdgeFinder score indicator or EdgeFinder score history. I changed the name to EdgeFinder score history. Hold on, let me refresh the page. What this page will allow you to do is it will allow you to tap into and access the historical. What is going on with my computer? My computer is like melting. I can hear it. Sorry, guys. My computer, I can hear it. It sounds like a jet engine. You can't hear it on the mic. The mic's probably not picking up. My computer is working really hard. My computer is streaming TradingView, EdgeFinder, Forex Factory. So I don't know what's going on with it. It's really slow right now. Hopefully I don't drop out of the stream, but I can feel my computer. My computer's kicking me under the desk. Or maybe it's my internet. I'm not sure. Anyways, what you can do with the EdgeFinder score history, if it's loading on your screen, is you can actually go back and look at the historical readings that the EdgeFinder gave you at different times. So it's definitely worth checking out. Have you considered monthly subscriptions? Absolutely, we have. We prefer to do one-time payments because it is way more advantageous for long-term traders. If you're somebody who sees themselves trading for 5 years, 10 years into the future, the cost of the EdgeFinder with a one-time payment is far more superior than paying every single month. Like if it was like $200 a month or whatever for 5 years, that's way more than paying one time for it for around $1,000. So we actually have considered monthly subscriptions, but in the interest of making it a more valuable product to traders who are here for the long term, we've opted for one-time payments instead. However, we do also allow people who can't afford the one-time payment to split it up into 3 payments. If that's something that you're interested in, you can contact us on our website. Chandler or James, if you guys don't mind dropping the link to send a direct message to our support team. If you're interested in splitting the payment into 2 or 3 payments monthly to pay off the EdgeFinder, that is also a choice that you can make. And our support team would be happy to assist you with that. Send us a direct message on our website, click this link here, or go to a1trading.com and click the live chat feature in the bottom right. Okay, is EdgeFinder loading today? Like, what is going on? Is just everything running super slow on my phone or on my computer? EdgeFinder might just be taking a break on my computer. I think it's saying, Nick, you've refreshed me 1,700 times today. Okay, I'm just going to close it and see what happens. S&P 500, the stock market just opened up, by the way. And with the stock market opening up, you can see we are back towards those all-time highs, tested them here this morning. SPX is at 61.25, guys. Really a crazy couple months. I am fully invested. It feels really good, to be honest, to be fully, like, what I mean by that is I trade on a stock brokerage account. So I have cash in the account, right? So I don't trade with leverage. It's not lot sizes. It's not futures contracts. I trade shares. So when I trade shares, there's like money in the account that you trade for shares, right? So I have like shares of stock, in this case, SPY, and I'm currently fully invested. And all that means is that I have pretty much all of the cash in my account is allocated to positions. I'm long some things that are working like SPY, some things that are not working so well like TLT, right? I'm down $2,600 on this position. I also have SMH played right now. This one's going pretty well. I'd love to see this thing follow through to the upside. So I have SMH, which is a semiconductor ETF. I'm also playing Bitcoin, right? So I've got IBIT. So I have a position here. It feels really good with markets at the highs to be still fully kind of locked in and trailing stop losses on a lot of positions. It's a good start to 2025 for me. Let's hope it continues to play like this. I know that it won't, right? Nothing is this easy forever. I went through a drawdown period in December, and so it's nice to be out of the drawdown and hitting fresh highs in the account again. So when we get into a situation like this, I always make a point to talk about this topic here next. Mine's loading. Yeah, no, it's my computer. The EdgeFinder is working fine. It's just my computer for some reason is not keeping up this morning. What's the advantage of the EdgeFinder? The advantage of the EdgeFinder is it scans a ton of data for you and it generates bullish and bearish readings for your favorite charts. It is like the system behind what I do, right? So like when I'm interested in a chart, I don't look at the technical chart as my basis for why I want to buy something or sell something. Why is the EdgeFinder, right? The EdgeFinder helps me source data quickly. Why has nothing to do with the technical chart, right? Because technical charts can be deceiving. Sometimes a perfect technical setup does not work out at all. A technical setup does not verify an idea for me. The fundamental analysis and sentiment analysis that the EdgeFinder assists me do is the reason why I might take a trade long or short. When is the technicals? And I talk about this often, this kind of three-part system: the why, the when, and how much. Right? How much do you want to buy? That's your risk management. The when is the simple technicals. And I use the simplest technical analysis ever. And I love to say that because I think a lot of you guys in the audience, some of you guys who are more experienced, you're gonna maybe agree with me on this, maybe you won't, but I have actually found that I went in a big circle in my trading career. I started out with a simple technical analysis. I said, look, support and resistance, simple trend lines, market structure, that stuff anybody can pick up within a week or two. It's really quite simple. And then I said, well, this stuff is not working very well. It's not, doing all that for me. So what did I do next? Well, I went to more advanced strategies. And then I, was like, well, maybe this will be a better approach. And I tacked on a bunch of indicators to my charts. And, then I went into like more advanced price action stuff. And then, I dabbled in the more market manipulation, accumulation, distribution manipulation, all that stuff. I dabbled into that for a while. And then all that led me to, this is not working any better than the simple technicals. And then when I discovered and started implementing, actually understanding why markets are moving, aka the fundamental analysis side of things, what central banks are doing, what governments are doing, what economies of the world are doing. Once I started studying that and seeing, oh, the market is reacting to what those things are doing. It's not reacting to technical charts. Technical charts are just showcasing the aftermath of those key forward-looking events, fundamental analysis. So I incorporate fundamental analysis to actually guide at the forefront of what I'm doing. That's why I take certain positions. Why I'm bullish on the S&P 500 right now is not because the chart actually looked terrible recently. Very choppy, indecisive, lower lows, lower highs, right? That would not have told me to buy the S&P 500. But the fundamentals did. And that actually helped to catch this wonderful trade to the upside. So, the technicals, yes, we had some support levels here, but you had lower highs. A lot of people were getting really bearish on the S&P 500 when it was headed towards this level, saying, oh, this is it. And then we had a false breakout, reverse course, and went higher. You can choose whatever you want to look at. You could say, oh, that was the signal. Obviously, in hindsight, you can do that. But for me, I never found success from really, advanced technical analysis. That was a big waste of time in my trading career. What led me down the right path was finally accepting I got to put in the hard work and study the same things that hedge funds do, which is fundamental analysis, which is why later on, when I started doing that, I was like, okay, why don't more people do fundamental analysis? It's because that stuff is hard work. There is a ton of effort that goes into fundamental analysis, right? Also, guys, I have no idea why the EdgeFinder just refuses to load for me. But some of you guys are accessing the EdgeFinder right now. Is it just me, or is my Chrome just messing up? Somebody let me know. Is your EdgeFinder loading okay? I think it's my computer because I can hear it making a lot more noise than usual. It probably needs to be restarted, but mine works fine. Okay. Yeah. Yeah. So imagine it crashing now. Yeah. I mean, it could, Sparky. At any moment, the market could crash. People have been calling. I've got one guy in my comment section who tells me the market's going to crash like every week. And then every week He just says it again. So at some point it will crash. There's no question that stocks will crash at some point. But I'm an active trader, so my goal here is actually to manage risk with a trade. So I trail stops. In fact, actually, I need to trail my stop. In fact, I'm going to do that right now before I forget to do this. Stops are getting trailed higher. I'm going to put it right here. That is going to be a move of 3.5% above my initial entry. So I can't lose money on this position. 3.5% is going to be right there. 602.12, 602.12. We're going to put it right there. And I'm going to modify that order. And I'm going to add in this level of support. And we're just going to continue to ride this S&P move. If it wants to keep going, great. And if it doesn't, we'll lock in profits. I am going to very quickly, because I just did that, I'm going to update my position here for members with inside of our VIP room. So give me a second to do that. But this trade is running really nice. And what I like to do is I like to let winners run. And to do that, I trail stops. So I don't know exactly when, this market is going to top out and reverse. It could go up for another 3 weeks straight like it's doing right now. That would be great. So we're going to move stops to 660.54.7 on this position. I'm going to update this in the group. Beautiful follow through, trailing stops behind previous all-time high, now potentially acting as support. Okay, and that all looks good. And updated trade there. So the S&P 500 trade, I just trailed it further in. What I did is I basically said, look, here was the all-time high. We broke that level and closed above it yesterday. From a price action perspective, I'd like to see this thing follow through from here. If it goes back and tests, that's fine. But if it kind of collapses underneath that previous all-time high, that will be my cue to lock in profits and move on from this position. And that's typically how I treat all-time highs is, you don't want to try and call. A lot of times, right, you get an all-time high and that just proceeds to produce many more all-time highs. So I do think there's a good chance that we could see this thing just continue to rip. But if we do not, if we fail out technically here, then take profits and look for the next setup. PMI is 1 minute away. I just don't get it, man. I do not. Is other stuff loading? Okay, COT is loading. Look at this. Like, this is totally my computer. My computer's just saying not today. Anyways, PMI numbers for the US come out in 45 seconds. Let me not miss that. EdgeFinder and I are fighting right now because I'm annoyed by this. Anyways, we got PMI numbers coming out here in just a moment. Flash services and manufacturing PMI numbers coming in. We'll go ahead and roll our breaking news. I'm just bailing on the EdgeFinder today, guys. It's making me mad. So strange. Oh, mine did not load. Okay, guys, okay. At least I'm not crazy. I'm going to send a message to support right now. PMI numbers coming in here. And wow. Okay. We're ripping here on S&P, NAS. Let's see what those numbers are looking like. Okay. I just sent a message to the support team. At least I'm not going crazy. Okay, flash services PMI came in 52.8. Wow, that's a big miss. 52.8 compared to 56.4. There was a beat for manufacturing. Manufacturing actually a positive number, 50.1. They also revised the previous one higher for manufacturing. Oh, okay. Okay, guys, I got an update from support, aka Julie, who answered this question for me. It's not EdgeFinder. It's Google. Google is having downtime on Looker Studio, which is what it's based on. Gotcha. So don't worry too much. EdgeFinder seems to be working fine. It's just the Looker Studio side is not showcasing correctly. Anyways, let's see. So we also revised the previous number slightly down, 58.5 here, 52.8 for services. Services were a little bit light. Dollar index seeing some downside off of that. Let's see yields. Yields are possibly very important here. And I think you have to remember that if the market is ripping in one direction and you get, somebody says, I hate mixed economic data. Yeah, I mean, this is kind of mixed, right? You have slightly positive, slightly negative. I mean, that's actually a miss in services. But if there's a mixed data point, typically the path of least resistance is to go with the existing trends, which has been strength for, stocks, indices, crypto, etc. 10-year yield pretty much unmoved off of this. 2-year slightly lower, so not a big reaction. Definitely signaling more of a mixed reaction. Dollar index on the 5-minute chart, you could see not a huge move. So pretty mixed response here from the market. Bitcoin's up 2% here, trying to make its way back to the highs. Same as my S&P trade. I'm looking for this thing to take out the all-time highs. This level of resistance is what I'm watching. What I'd like to see, guys, for me to tighten up my stop a little bit further. Well, actually, what I'd really like to see as like a qualifier to trail stops is I would like to see a strong closure above the previous all-time closing high, which for Bitcoin is sitting around 106,000. So we'll see if we can get that. Anyways, guys, I just wanted to remind you that although the EdgeFinder is currently down due to Looker Studio, Google having a little bit of a bug right now, it will be back soon. And if you have not already picked up your free copy to try out until Monday, it is free until then. We're going to drop the link for that in the chat. And then we're going to take a quick break here. We'll be back in about 30 seconds or so with Kenzo to talk fundamental analysis as we do every week for Fundamental Fridays. Stay tuned. We'll be right back with Kenzo just after this.
2025 is here, and to kick off your new year of trading, you can get access to our free A1 Trading Telegram channel. Inside, we share EdgeFinder data, free trading courses, market forecasts written by our in-house traders, and free trade ideas on Forex, indices, gold, and more. And if you're more into the stock trading world, we have a whole Telegram channel dedicated to just that. Start your new year off right by joining the A1 Trading Telegram channels completely free. Links can be found in the description and in the live chat. Now, back to the show.
All right, we're back with Kenzo. Hey, Kenzo, how you doing?
I'm doing great, thanks, and you, man?
I'm doing well, and it's good to have you back on the show, especially with so much to talk about. I know we've had a lot of things happen since we've actually last spoken because I was out of town last Friday, but it's good to see you again. And I'm very curious to hear your thoughts here recently on the indices. I know that is a topic that you and I both are passionate about talking about. We talk indices a lot, and with indices hitting fresh all-time highs, I'm wondering, what are your thoughts on them? Are you watching any for entries? Are you in any trades? What are your thoughts on the indices right now?
Yeah, I think everything looks good. I was on NASDAQ on a buy, also US30. So both of them actually on a buy. So
Nice.
I think Trump, he was actually speaking yesterday, and he mentioned that Federal Reserve, they have to cut the rates. And I think that actually pushed the market to be quite positive, but it's been positive for a while now, but that will add something, because if the rates are going to go lower, that is going to be good for the stocks. And yeah, I think that it's actually something we actually looking at. Another thing is the proposed deal for AI. I think 3 companies, Oracle and the other ones, Oracle, OpenAI, and the other bank, I think. So about AI, I think that can also boost tech stocks. So I think that is actually a good thing for them. I think going further, I'm expecting to see some very nice moves.
Kenzo, do you own or trade any individual stocks?
Come again?
Do you trade or own any individual stocks like Oracle or Microsoft or Amazon or anything like that?
Yes, unfortunately, I trade some local companies.
Mhm.
So yeah, I will be actually trying to add some like US companies going further.
Okay. Yeah. No, I was just curious because, of course, some of the individual names, like you mentioned, Oracle and recently Apple's been down. It's been very interesting to kind of watch the tech trade idea. And you know what's interesting too, Kenzo, is that when we heard from Trump yesterday, there seemed to have been a distinct kind of mention or a shout out to the U.S. being the capital of AI as well as crypto, which I thought was very unique, hand selected to kind of parts of the market, arguably the most exciting, most kind of most watched areas of the stock market. You know, whether you like or dislike Trump, he definitely seems to be a bit of a hype man, and the idea of him kind of adamantly supporting AI and crypto definitely may have also helped to kind of get the stock market excited yesterday. Of course, we'll see if that has the follow through that many are hoping for. But the Nasdaq looking really strong. We're at the highs of, and I want to ask you, of the three, you said you've been trading Nas and US 30. Do you have a favorite in terms of like going into this year? Do you think? And here's maybe a bigger question for you. If you had to pick one of the three for 2025, at least for now, which would you say is your favorite for upside?
I will go with Nasdaq because
Okay.
it's pure tech companies.
Yeah, no, that makes sense because again, with the growth of the Nasdaq and with all of the kind of push for AI, Nasdaq has been a major winner in that area. I actually wonder if this year we will, however, see some more participation from some of the places that have not kind of participated as much. The divergence between, for example, the Dow Jones as well as the Nasdaq has been pretty immense in the last 2 years. If you look at the performance of the Nasdaq and compare it with the performance of the Dow or even the performance of the Russell, what you'll notice is that the Nasdaq has greatly outperformed those other two areas because of what you just mentioned, Kenzo, the high exposure to technology. But I wonder if perhaps there is room for more broadening, is what they call it, beyond just technology companies. Like, for example, industrials and energy companies and healthcare and these other areas of the market that have not perhaps lagged a little bit. I wonder if they will participate a little bit more than they did in 2024. Last year, it was like most stocks made about 10% gains, and then the ginormous tech companies made like 50% plus gains. They made ginormous moves like Nvidia and, as you mentioned, Oracle and companies like that had phenomenal years last year. So, I think that personally, I think that the participation of multiple areas of the market this year could be impressive. I think my base case for this year is more participation across the board, but I do also agree with you that technology stocks will probably continue to play a really key role in the overall earnings. So I guess my next question to you is, with the indices, how are you looking to play them? If you're in positions, are you trailing stops? Are you looking to take profits? Are you waiting for pullbacks? What's kind of your next step for trading on the indices?
I like to actually hold a little bit longer, but currently I am expecting to just to close because we still actually trying to guess what might happen, especially if we look at Trump. If you still remember, Trump used to say he will be adding 100% tariffs on China.
Hmm.
And the last time I checked, he actually added 10%. And he started to say he likes President Xi and stuff like that. So, which means he's no longer aggressive that much. So now, those companies, they might still move that much and stuff like that. But I feel like along the way, yes, I need to get out. Like now, I can say they are overbought, but the trend can still continue. So obviously, we are heading to the first financial year, maybe February, March there. We will have some reports from all these companies. So mostly before that, we tend to see the market starting to go or selling or going lower, which means we have to be ready. If the market starts to sell, we need to get out and buy again when the market is at the lowest level. So it's good to hold longer, but along the way, I have to cash out, you see.
Yeah. No, I think that's a really kind of level-headed approach. If you think about it, if you were buying some of these dips, you have to ask yourselves, well, at what point do I, look to capitalize on some of the gains that I've made? So I don't dislike the idea of, especially with Trump being so volatile, right? Whether, again, I say this every time, but regardless of your politics on it, he's a volatile guy. He has a lot to say. He has, he yesterday called out the CEO of Bank of America on the greatest or the largest economic televised event possible. Called him out by name. I mean, it was called him by his first name, Brian I forget his last name, but bank CEO. He called him out right in front of everybody. So he clearly, regardless of your politics on it, he's a very volatile guy. He says his mind, and with that, a lot of volatility usually ensues. So I think that even though I'm positive on the indices, and it sounds like you're in the same camp, there is room for large pullbacks within this year's move. We may see a 10% drop in the S&P 500, and that still could be very constructively bullish, right? So playing for pullbacks may be wise, rather than just kind of buying highs and hoping that they continue to go higher.
Yes, plus remember, if they say we are on record high and stuff like that, it means whoever who bought the stocks or shares earlier or maybe last year or whatever, they are actually on profit. So one way or another, some of them, they will cut those profits. So which means if you are an investor, maybe you might be rebalancing your portfolio. So which means once you cut, it means the market will be going lower because we're selling those shares. Then we can buy where maybe the price is favorable. So, and I think on NASDAQ, on USD, when we check all these companies, most of them, they are on record high. If they did reverse, there are very few, but you can see that there's no point actually holding the profits, especially at the start of the year. So which means we can cut and take some profits or rebalance our balance sheet. Then we can start afresh because already the market is higher.
Yeah.
You see.
I love that. Here's another question for you, Kenzo. Going off of that basis, a very hot topic right now in markets is gold, which is sitting just near its all-time high as well. You've got a little bit of everything rallying. And what is this signaling to us? Is this signaling that there is possible kind of uncertainty ahead? Typically gold does shoot up when markets are worried about something, or at least there's an increased risk of something happening. There was a lot of stuff that was said yesterday. I actually, you pointed it out well. He seemed pretty soft on China compared to expectations, but actually kind of stronger on, Canada and the European kind of regulations against U.S. companies. So maybe there's some uncertainty there. Maybe there's some rocky roads ahead, and maybe that's why gold is up a little bit. You also had a little bit of give back in the dollar index. So what are your thoughts on gold right now? Are you bullish on gold, bearish on gold, neutral?
I think I'm actually neutral. I think maybe the main reason for gold, remember, gold started to move like this, especially between Russia and Ukraine war. So, and with the what do they call these things that they did on Russia? So it means
Sanctions,
all those
yeah.
investors in. Come again?
Is sanctions on Russia? Yeah.
Yes. So it means most of those investors in those countries, most likely they don't really have access to a lot of US stocks, or let's say other stocks, because everything's not performing very well, or they are not really allowed to go outside. So which means we have to buy gold. But The thing is, Trump, he said he's gonna try to resolve the issue between Russia and Ukraine, and he still kept doing that. But now he changed and said, okay, maybe we can able to do that within 6 months. It's no longer over 24 hours. So which means if the war is still going to continue, what will happen with those investors? I think they will still keep holding gold or keep buying until they think, okay, it seems like things are now going to go back to normal. Then they can actually focus on other stocks or maybe sell their gold and stuff like that. So at the moment, I think it's because of Trump. If maybe they were able to do that within a week, or if he can have a way to navigate the issue of Russia and Ukraine, I think there is no way that gold will keep going up. So, but at the moment, it's like, okay, let Russia and Ukraine war continue, then we will see what we can do along the way. So it means gold can still actually go higher.
Yeah, no, that's actually a really good point. Trump made many claims to stop the war in Russia within 24 hours, which Trump has a tendency to make ginormous claims. Wanting to, for example, annex, or not annex, but purchase Greenland into the United States. So there's a lot of big kind of claims. The concept of Russia and ending the war within 24 hours, perhaps, as you're kind of pointing out, every day that goes by that there's not kind of a formal meeting between Putin and Trump happening, perhaps that risk of Russia not rolling over and kind of stopping the war with Trump in office, maybe that persists. So I guess maybe there's a little bit of a hedge happening where people are like, well, we don't know what's happening there, so let's stay invested in gold for the meantime, and in case there is some kind of bigger fallout or failed negotiations or something like that with gold. So really good point on that front. What about Bitcoin, Kenzo? Are you watching Bitcoin at all? It's right near, everything seems to be on the precipice of making fresh all-time highs. I have a long position on Bitcoin and I'm trailing a stop, but I'm wondering your thoughts. We're right back to the highs. What do you think about it?
Yeah, I think Bitcoin is going to actually move very nice this year. I like the fact that they is actually positive about cryptos. And I think he signed a bill about crypto, whatever. So, which means actually Bitcoin is actually on the right side, even though there are so many cryptos. But I think going further along the year, I think we are going to see some new highs. Already we are playing around 100K. So maybe now we can say, what's next? Are we going to 150 or 200? So obviously the estimates are going to be there, but I think we have a long way to go, and in a positive way. But yeah, I think we are on the highest level. Anything can happen. The market might reverse, especially cryptos, they can go crazy. But the overall look in the long term, I think we are still on that uptrend.
Yeah, it's been a bit of a range-bound market here recently between the 90,000 level, let's call it, and the 105 to 108 all-time high. Actually, I think the all-time high traded up to 109 or something. Yeah, right around 109. So, we're back close, 105.6 at the time of us streaming. So, we'll see if this thing can actually, I'm looking personally to see if we can actually break out and close above this range, which could perhaps signal that we are finally kind of out of this consolidation. But otherwise, if we fail out here, I have a stop loss below this level of support around 100,000. If we drop back into the 90s, I'm just going to take profits on this move and look for a better entry. So just waiting on Bitcoin to make a decision here before pushing on. One other market for you is oil. Oil has been a big topic with the new administration, trying to get oil prices lower to assist with the inflation story, as well as put pressure on Russia for the Russia-Ukraine war. What are your thoughts on oil here? Are you any opinions on this one?
Yes, I think oil, it was like quite low for quite some time. If you check, it's been consolidating around the same level. I think to go lower than that, I don't think maybe OPEC countries will allow that, because they won't be making any profits. So I think one way or another, the price might still go a little bit higher. If maybe as Trump still continues, as long as the war still continues, I think slowly we are going to see the oil prices going higher. Unfortunately, that might also push inflation a little bit up. And that might be a difficult issue with Trump, because the aim is to make the prices of oil to be quite cheaper, and at the same time, inflation to be lower. If inflation is lower, it means rates are also going to be lower. So it means actually that war is very, very, very important for Trump. And I can see that it affects almost everything that we touch. But at the moment, I think 60 something, 70 something, to me, I think it's still very low. It might go up a little bit, maybe before it goes lower again.
Yeah, it's had a big shoot up here prior to kind of the inauguration, and then afterwards has started to trend back down here. But in the last few years, oil prices have really seriously come down from those initial onset of the Russia-Ukraine war. Oil prices were up near $130 a barrel at one point. Actually, yeah, 130, which is quite crazy to think now we're not quite half of that, but significantly lower at 75 or so. With oil prices, as you mentioned, very important to the inflation story, which is very important to the administration as well as keeping inflation under control. Especially, Trump is, you made a mention here at the beginning. He basically demanded, I think he used the word demand, demand the Fed to cut rates, which, that's not how that system works, right? The Fed is independent to the executive branch. That's not controlled by that. It's supposed to be independent. So, Trump always has a lot of stuff to say, right? Whether you love him or hate him, you can rely that he's going to speak aggressively on whatever he's talking about. So he quote unquote demanded that the Fed cut rates, and again, for the Fed to deem it responsible to cut rates, inflation's got to go lower. And perhaps the way to gain some bargaining power is for oil prices to go lower, wars to stop. That would allow oil prices to go lower. And then kind of the story would be, okay, inflation's lower, we can now cut rates. So, that's on paper how that goes. But the difficult thing about markets is that there's a lot of unpredictable stuff about this, right? New escalations in the war situation could make things harder on the inflation front. So very, very important chart, I would say, in 2025 is the oil price overall.
Yeah, I think I'm actually positive, actually, with the way I see things. Unfortunately, Trump actually got things still very hot. Inflation is still very high. Tensions in the Middle East, at least tensions in the Middle East, now they seems to be cooling off. But I think maybe in 6 months, maybe things will be much, much better. But just to tell Federal Reserve to cut the rates, even if maybe they wanted to cut, I don't think they will do that, because it will seem like an influence from the politician or political actually influence, and which is not something that they should do. So I think it's just making things difficult for everyone. I think he was just supposed to keep quiet about that and push other stuff. But I'm actually positive going further.
Yeah, no, I kind of agree. I don't think it's really the bipartisan kind of ideas that the Fed should be independent from the government, and that is an interesting kind of hill to die on, if you will. But we'll see what happens with it. Overall, as you mentioned, inflation, we can actually pull it up. The EdgeFinder is working again. We're having some issues here earlier. Inflation has been rising once more in the last few months. So we're up to 2.9% inflation CPI year over year. And that does pose some issues, right? So we want to see inflation in order for the Fed to really, cautiously go from holding rates steady to cutting rates once more. They want to see inflation fall. And we got down to 2.4% and bottomed out. if we could go back to that 2.4 and get down towards that 2%, that would be very, very positive for risk assets, especially stocks, cryptos, et cetera, because that would give the Fed the room, the green light to cut rates. I actually think that if the Fed were to cut rates just because the president demanded it, it would actually really seriously it would question the Fed's decision making. You again, like you said, I think that would be a misstep or a mistake to cut rates just because the president said, "Hey, you should cut rates." Right? The Fed has a job to do, and it's different than the president's job to do.
Exactly. And it can also backfire because they might cut the rates. 2 months later, inflation skyrocket again, and that will be something very bad. And I think he will still complain to them again. But I think for now, the best way that he can do is to try to stop the wars, try to slow down with the tariffs, because
Yes.
the dollar was actually already, it was going down. If you checked last week economic events, they were all actually slowly cooling off, which it was good. Retail sales, CPI, PPI, they were all cooling off, which is good. So maybe next month things will be continuing like that, which means he doesn't really have to say anything.
Yeah.
But for now, unfortunately, he always gives the speeches. Some of them, they will trigger the dollar to be stronger. Some, they will be good. But I think the best way is I think, unfortunately, you can't tell him to stop talking. But I think at the moment, economy was actually performing very well and inflation was slowly cooling off. I think maybe around March, it's where we will see some good news maybe.
Yeah, no, you said it well. I think there are things that he can control more of, like for example, negotiations with Russia, and it seems like there's already been significant progress in the Middle East, which is great. There was threats from Trump before he was even in office. He said, if you don't sort that out, we'll be over there with whatever. He basically made a big stick reference, like the Ronald Reagan days, basically just kind of, if you don't sort it out, we'll come sort it out for you kind of thing. And it may have seemingly worked in the Middle East. The question is, will we see some progress with Russia and Ukraine? That would probably be the biggest way, as you mentioned, to help with the inflation story. That, and as you also said, tariff rollouts being slow and steady rather than all at once could actually keep inflation less worrisome to the market, and perhaps we could finally see inflation drop. I really think it comes down to that oil price. That is going to be so key to the story here of 2025. And if there's failure here, right? If this does not work out, I too am optimistic and hopeful that this works. And regardless of your politics, I would imagine most people are also on the same page. Like, hey, I hope it works. If it works, right? The markets will cheer. And if it doesn't work, if there's missteps, if there's stuff that falls apart along the way, if inflation has a strong uptick, right? If inflation bottoms out, we could seriously be in another painful period for markets. So it's all about this inflation chart as far as I'm concerned for 2025.
Exactly. At the moment, it's like we are actually just holding some like hope if maybe Trump, he continues with the right decisions, because if maybe he push too much, or maybe Russia doesn't really allow the deal, because I think they demand a lot to take whatever they already occupied. So if Ukraine refuses and maybe doesn't really push it that much, obviously whoever who was actually positive, thinking that okay, things will go very quick, will be resolved very quick, they might think twice. And by thinking twice, it means we might see some meltdown on the market. And that won't be good, because that is the guy that we think he can solve the problem. If he can't, it means why are you holding whatever you're holding? Because
Right.
the market actually operates on emotions or hopes, or we just trust. We don't really care much about the numbers. Yes, the numbers, we check them every day, but sometimes we give the trust to certain individual. If he performs very good, mostly the market will perform very good. If
Yeah.
he doesn't really win, mostly the market won't even look at the numbers. Then the market will just melt. You see?
That's well said, Kenzo. And I do think that it just kind of sets up for 2025, this environment where the focus will be on the administration and Congress and what is happening in terms of specifically for markets, the economic and foreign policy stuff. If there is positive progress on those things, markets may continue to progress higher. But if anything does not work out, as you mentioned, as the market is hoping for, there's a lot of hope out there right now. The realization that something is not coming as planned could seriously derail some of the risk assets that we're seeing, Bitcoin at highs and, stock market highs. I do think that gold market ripping through to new highs is at least something you've got to keep in your back pocket as, okay, that's a little concerning. Why is gold so excited right now? So definitely worth mentioning. Kenzo, we went through a lot today. I really appreciate you coming on the show here. And I just want to mention to everybody who's watching here, Kenzo comes on every Friday. We do a segment called Fundamental Fridays, where we just chat about the latest economic data, what's happening with, the world, and some of the real driving forces behind the markets that we all know and love: gold, silver, stocks, indices, all that stuff. So if you enjoyed this commentary, I would please ask you to go subscribe to Kenzo's YouTube channel, Extra Hot Forex on YouTube. You can also find him on socials elsewhere, and you can join his, Telegram channels and all sorts of stuff. So make sure to do that. Support the show by supporting our guests. Kenzo, thank you very much for coming on the show today, man.
Thank you very much, and also your viewers, man.
All right. Have a good weekend. And guys, up next, we've got Chris Pulver. Chris Pulver taking over the show. You guys know him and love him. He is a regular host. He takes up the rear on the stream. He's our second anchor here. And stick around if you're interested in learning a little bit more about what's happening in the markets. He's very technical. He's going to be going through, I'm sure, a little bit of everything: stocks, indices, Forex, commodities. He's got you guys under control. So stay tuned. We'll be right back with Chris Pulver just after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Friday. Welcome back. Nice to be with all of you. So overnight, the Bank of Japan raised rates to 50 basis points. You would think, looking at the currency strength chart, that they didn't do anything. But we've got dollar weaker, yen weaker, Swiss a little bit softer as well. Pretty choppy on the volatility front for the Forex side. The dollar's been a little bit softer. We'll have a look. I have my Aussie dollar position that's actually in profit right now. We had talked about this trade. This is one of my Pulver alerts. We're back up to this pocket here. I can just close the trade out for a very small win. I'm willing to take this a little bit further. I think if we're going to see some flows out of China, we start to see some commodity pairs coming back and benefiting and outperforming the dollar, I think that the Aussie dollar may have what it takes to come back into this area. I wouldn't get super aggressive on these profits, but if we come back a little bit further towards like 6,400 or so, then I'll probably take some profit on this Aussie dollar position that I scaled into. So I was in at 63.62, not the 6,000 that didn't get filled. So I'm in two positions here. And if I get back to 6,400, that would be 90 pips and 190 pips total. So I'm going to set a chart alarm here around 63. Let's go 63.6375. Oops. 6375, and that's coming right back into the support zone. I'll even go, I think 6350 is fair. I'll edit that to 50. 6350. Okay. So if that chart alarm gets activated, I'll probably just take the profit. Have a look here at New Zealand dollar. Same thing. New Zealand dollar is back to break even on 3 fills. I got filled at support, took it down a little bit lower. There's a pocket there around 5750. I'd like to see if it pulls back towards this 58 to 5850 zone. Let's put a chart alarm here around 5,800. and consider getting out. Okay, so let's look at the dollar index really quickly. So dollar index is pulling back, which I'm totally fine with. I had said look at this support zone around 106 to 105.50. If the dollar pulls back, that's great. I hope that yields will follow. We will find out more because next week on Friday, we have PCE numbers. Next week on Wednesday, we do have the Fed comments. I mean, right now we have, and I'm sure there's the media is going to make a big deal out of this. Like, what did Trump say yesterday? You know, demanding that interest rates go down. It's like, idiot. We can't have interest rates go down. We can't have a more dovish Fed. Look, they're already freaking dovish. They cut 100 basis points in the face of inflation going higher. Like, the Fed doesn't have to cut rates. They shouldn't be cutting rates. If they cut rates, that's going to be way worse for the market, in my opinion. We have all the data that's showing that inflation is going higher, right? And next week on PCE, it's forecasted, I believe, if it's actually on the calendar, I believe next week on Friday, if there's a forecast. So we have PCE. This doesn't show. I'm going to go to the Bloomberg calendar. And I'm just going to look at Wednesday, or I'm sorry, at Friday next week. So I'm just going to look at the 31st for next week. And here's the news. Are there forecasts? Son of a gun. So there's not forecasts. Crap. But we can go this. We have all the news at 8:30 on Friday. We'll just get into this zone. We got GDP for CAD, but I'm looking mostly at PCE. So the PCE price index year over year is at 2.4 from the previous print. There's no forecast right now. And the core PCE at 2.8. So my concern coming into next week would be that this actually prints higher. So if we print 2.9 or worse, I mean, I would think anything greater than 3% would be bad news for the market. A 3% core PCE is not good. Okay, because if we look at historically, core PCE is one of the Fed's primary measure of inflation. If we look at the history here, it wasn't that long ago. So from 2.9 down to 2.6, back up to 2.8. If we print a 2.9 or 3%, I don't think that's going to be looking good. So again, Fed is probably not going to do anything based on what we see with their watch tool. They're going to be pausing through most of the year. Maybe a June cut. This is, again, pretty much baked in for no action on the 29th, which is next Wednesday. Probabilities here. Well, this is a lot different. What the hell? Okay, this is totally different than what we had literally on Monday. Okay, so let's make some sense of this. Now, we have our aha. Okay, let's dive into this. So notice how the columns have gone to the right. Now we actually have a small percentage that shows the Fed might be hiking later in the year. Okay, now it's not the highest probability, but the fact that it's on the chart means like it's not a 0%, right? It's not a 0% that the Fed would be hiking this year. But what we do have is pause through May. That first cut would be coming into June. And by, okay, never mind. So the probabilities just go way out to 2026. This whole thing got updated. I was like, why does it look so different? So we're still the same as we were in 2025, which is a cut in June and then nothing for the rest of the year. Possibly a mix between October and December for another possible cut. It would go into early 2026. One more cut forecasted for, and that's a slim probability. Like we've got 31.7 for a pause, 31.8 for a cut. But I'm just going with the blue shaded zone. And then would we hike after that? That's silly. Would we cut after that? So honestly, this Fed stuff is all over the place. 2025 still looks about the same. Meaning, if the Fed's going to cut, it would be summer. It'd be June of this year. With basically 5 months of data coming in, how's inflation doing, where the market's at. Let's watch the dollar. Let's watch the 10-year yield. You want to find out where the pain is. If yields go higher, there's going to be pain in the equities market. It's almost impossible not to have that. But if the yields are dropping and the dollar's dropping, then it gives us some slack in the yield market. Maybe things lighten up a little bit. Equities could still justify some higher highs. Valuations are quite high. Earnings would have to prove to be as good as expected, and earnings are pretty much priced to perfection. The bar's pretty high, and I would say this: going into next week, we have Mag 7 earnings. A couple of them. We have Tesla, and we have Meta, we have Microsoft, and we have Apple next week on Wednesday and Thursday. I know the market has kind of rotated out of Mag 7 early in the year a little bit, but I still think that they are a big contributor to what's Mag 7 earnings, what's arguably the strongest companies in the world, what's their earnings. Is it beating expectations? The average miss is punished way more than the average beat. Okay, so if the market is beating expectations, the average move for the SP500 is like 2%, but the average miss is down like 4 to 6%. So just keep that in mind trading earnings. I mean, Netflix was a good example. Netflix ripped on earnings and the expectation was about 10%, went up 15%. Cool. So we could have a lot of volatile price action through earnings season, which I'm okay with. I just want to be careful about how I price things out, make sure I'm trading things that are liquid. I priced in something on Tesla yesterday that actually might be interesting to look at for today. Tesla's earnings are Wednesday after close. Okay. High PC good for the economy? No. I mean, right now, no, not with higher inflation, because if core PC is going higher, that means the Fed from being restrictive. That means that they're then, if we have PCE coming up and the Fed has already cut 100 basis points, we're now getting less and less restrictive. So the fear is that we would have the inflation readings would start to go possibly inverted. Going from 3% to 4% is a big move, but I feel like once like inflation is kind of coming back out of the box, it's hard to stop it. Especially if we're talking about a president that's saying cut rates. I demand we cut rates. Okay, that makes sense on paper. It makes sense to say it, but if we can't do it without stoking inflation and having a major second wave of inflation, that would crush the economy. So again, saying and doing are two different things. Does the country have all the faith in the world that Trump can fix everything? We're going to find out, because if any time the guy needs to fix stuff, it'd be now. And it's one man, and there's a whole government to deal with, and I don't think it's an easy task. But he'll basically shame departments into doing it. He'll troll them until they take some action. We saw it back in 2016 to 2020. I mean, he bullied the Fed, and we actually had some dollar price action. So anyway, we'll find out. Is the Fed watch tool actually of any use? It's of use because it's been spot on for 15 years. This thing has not been wrong since the surprise in 2009. Other than that, this is the Fed's tool that is transparency. Now, the reality is a lot of this stuff, when the market catches wind of a rate cut or the market catches wind of a pause or rate hike, a lot of times the market prices this stuff in. But as far as looking at where this information is flowing and changing, I mean, this looks very different. A lot of this just because if we go to the current, we are finally out all the way. The big difference that I see today is we're showing the watch tool all the way out to 2026. Okay. So we're currently sitting at 425 to 50. If we go out to the end of the year, the highest probability is that we're down about 25 basis points. So that would signal that this year, the highest probability is that the Fed cuts one time. Okay. And going out to 2026, the highest probability is that the Fed is down another 50 to 75 basis points. So per this tool, and this, again, this is what the market is kind of looking at right now, but is this optimism to show that the Fed is going to be continuing to cut rates a little bit through 2026? Maybe this year's more of a pause. We make sure that things don't get overheated and the market doesn't break down and have a recession, but the Fed would be still looking to try to cut. Again, it's all subject to change. If things get rough, then there's just going to be more pause. I mean, right now, I'd say the Fed does not want to hike rates. They don't. That would look terrible, and I would say the Fed would lose a ton of credibility by a major miscalculation in monetary policy. If they go from 100 basis points cut to then raising rates, I think that the Fed credibility would be, trashed. So, and I don't think they want that. And I think for that standpoint also, that's why they would rather not be cutting aggressively more. So a pause through most of this year, maybe one cut for this year just to make sure that things don't get overheated. But that again, it's like, look at how this reacted last year when the Fed was talking in 2024, we're going to pause, we're going to pause, we're going to pause. April had a pullback, a 5% pullback on the S&P, like 6% in the NASDAQ, bonds were down, crypto was down, like it was restrictive. And then after that, the market caught wind of like the Fed's going to cut. And so they started to rip higher. The market was speculating on Fed's going to be cutting. So they priced it in, so all that is, it's like either the market is pricing in like what the reality is now, but usually the market is forward thinking. So depending on how much restriction the market is pricing in for this year, I mean, we're back up to all-time highs. S&P hit all-time highs. Congratulations. You just had like a gap-filled 10-day move that is just right back to highs. Now, I don't think the momentum is there to support that move. I think these gap fills are very likely. I don't see this market. I mean, again, I don't want to call the top because that's the dumbest thing ever, but I could see this market with this high and a lack of momentum. I could see this market coming back and filling some gaps. I mean, look at the backside of the trend line. I'll say this. There's two spots I'd watch. If we come back into this Fed level, okay, we pull back to the Fed level, does that offer a bounce? Okay, now we're talking about a bit of a dip or pullback the market can get excited about. If we're really that bullish, then we get to buy the dip. Okay, or we see a pullback into the backside of this channel, which is resistance, 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 and we got above that. We pull back to the backside of the channel. Let's say we take this low, this high, found about a 50% pullback zone. Same thing. Is that a dip that the market can get excited about? Right? So there's a couple of buy opportunities here. If we have a dip here or a pullback to the backside of the channel, that would be where the bulls can step in and show that they really are bullish. But if we go down and fill all these gaps that have been created for the last 2 weeks of trading, we are no better off than where we started, and this market can't make up its mind on where it wants to go. And part of me thinks that that is the reality that we'll be dealing with over the next like 30 to 60 days. I could see this market, having a nice little optimistic run, but having a reality check, and PC comes in higher than expected, and earnings maybe are a little bit lackluster, and valuations are high, and so the market starts to show it, by showing a bit of a pullback. Okay. Let's see. Oh, you're totally right, Lee. Lee says, I don't think Trump would hold himself accountable if the Fed acted on his wish and the economy suffered. Of course he wouldn't. That's what I said that yesterday. Like, Trump is a guy that will take all the credit and then also transfer blame. He's not going to take any accountability for, if he trolls the Fed and the Fed cuts rates and we have a second wave of inflation and things get crappy and we have a recession, he's not going to take accountability. He'll blame Biden and he'll blame the Fed. Like, nothing will stick to Trump, for better, for worse. Like, everything good, give it to him. He wants all the praise. Anything bad, it's not his fault. Somebody else's fault. So that's just him. And you can, if you've known him for 20, 30 years as Donald Trump, not President Trump, he's always been that guy. So I don't know why people give him like this free pass of like, oh, he's such a good guy. It's like he would always take all the credit. I've before he was president, I read books on him, it's funny books like Rick Riley from Sports Illustrated wrote Who's Your Caddy? He had a chapter in it. Commander in Chief, the whole book is about him and his golf game. So anyway, leisure reading, but you can have some fun with it. All right, moving averages, Cedric. It's pretty simple. I have the 21, the 50, the 100, the 144, and the 200. They're all exponential moving averages. So all EMAs. All righty. Let's talk other stuff. So we've got the S&P poking the highs today. We had an interesting liquidity run at the end of the day yesterday. I was in a trade going right up to that 610 strike, and I did get it yesterday, which was kind of nice. I took a nice little profit there. So that little rip towards the end of the day, it was silly how it happened, but it did hit exactly what I wanted. That 610 level opened up today. So that was a nice little win on the SPY. We had a nice one on Netflix this week. Equal weighted. Let me go back to the higher time frame here. So we'll go SPY. I was looking at futures this morning. I took a quick stab at futures and grabbed a few bucks, just a couple of points, nothing crazy. So I'm trying to think if it shows. So 22,030 to 22,009. So I grabbed about 20 ticks or 20 points on the NQ, and I grabbed just a couple of points on the ES. That was a 150 to 149, like literally 1 point, but it was a couple bucks. So SPY, I think we have some gap fills, and I'm just curious how quickly or how orderly, how organized this thing might be backfilling this rip. So we've had a 7% move to the all-time highs. The S&P has led the way, so a bit of a broader market rally. So we've got 6.15% to the upside from that January 13th low. Equal weighted is looking a little bit better, so I'm happy that I dollar cost average in there. Futures wise, back up to the highs, but expect some volatility ahead. I think we're the Qs, we're not quite at the highs, and maybe we're not going to get there yet. The Qs kind of the same thing. Look at this. If the Qs pull back and have a gap fill, okay, if we pull back and have a gap fill, then the market finds all-time highs in the NASDAQ, fine. To me, it's justified. But if this just goes higher, higher, higher with gaps galore, same thing on the S&P, I think that's an unsustainable rally. I mean, every time we've seen crazy amounts of gaps, it does pull back, right? So we've got big gaps and big gaps. It pulls back a little bit. Big gaps here, pulls back, and then it like backfills all of it. Now I know that was August, but still, like, I just don't see the market inefficiently moving the way that it did. Okay. Yeah, look, I'm not here to get in a pissing contest about who's right politically. I mean, Biden didn't blame anybody because the guy was, 80 years old with dementia. So Biden doesn't do anything other than get pumped up with Adderall and sit in front of the, the press conferences hoping not to say anything stupid, right? It's like, I can't believe where we're at politically. It's awful either way. Look, I think we have a president right now that, for all of his pros and cons, we've got the first convicted felon as president. It was a landslide election, and it's a Republican sweep. So the question is, with Republicans having the power that they do, are they going to try to fix things for the economy? Or are they going to do things more socially, like repeal, take Roe v. Wade away, and maybe do a massive deportation bill? I mean, I don't know. It's like, do you want to do the social side? Or do you want to do the economical side? I mean, but the argument is that Republicans are not conservative. Fiscal spending, like, everybody spends money. The government can't stop spending money. So regardless, it's like nobody takes credit and accountability. They only want the praise, and it's always who's in power wants to stay in power, and it's always going to be like that. So I just think the whole thing is a mess, and it sucks. But we are now in a time where politically it is going to be front and center every single day. And that is what was exhausting about 2016 to 2020. Every single day, politics, politics, politics. Right? So look, I'm happy with less government. I'm happy with possibly Department of Government Efficiency actually doing something meaningful. But you realize that there's only about a 13% discretionary budget in the government that could actually be fixed. Everything else is allocated. And if you want to touch military spending, it's never going to happen, right? So if it's military spending or something on like Social Security for right now, anything that gets bipartisan support, you're never going to be able to cut that. And you're not going to fire everybody in the government. So I think Elon Musk's job for DOGE is basically set up for failure. And I wonder what that looks like. Does he just go down in a blaze of glory, like he's here so close to power right now, but can't do anything because it just shows how big and bloated and corrupt the government is? Well, I mean, he owns Twitter, so he can talk about it and he can share things and show some transparency. It doesn't mean he's going to fix anything, So anyway, they're all the same. It's who's in power stays in power, wants to stay in power, does anything to stay in power, blame the other party, toe the line. It's why I'm not in politics, because I hate it. So anyway, what I care about is, do we have something to trade? And I don't want to trade, the coming bear market. I want to figure out how to navigate this stuff. Let's try to make some money. All right. So S&P at all-time highs. NASDAQ is just behind a little bit. I can see some gap fills on all these indexes just a little bit for a pullback. If we have a pullback, the market's interested in buying the dip. Okay, cool. I'll get behind a little bit more of a bullish run if we have a gap fill. But just to run, gaps, I think that's an unsustainable run, and we're moving probably faster than reality or faster than the norm. We go to the Dow, same thing here. The Dow's made a heck of a run with that big gap through CPI having some momentum. So if the Dow does not quite get to all-time highs, same thing. Does this also come back and fill some gaps? If this is an area that the market wants to buy, if we have there's a gap right there, there's a gap right there, there's a gap right there, there's a gap right. It's like we have the same thing. All of them have 3, 4, 5 gaps the last 2 weeks of trading. So does the Dow have what it takes to get to all-time highs? Well, maybe, but what does it do from there? Maybe it comes all the way back down to a range. And we are just sitting here wondering, where does the market go? I'm happy buying the dips. I'm happy looking at IV going from high IV now to low IV. Does it go back up to high IV? Well, if it does this, it's going back up to high IV. Guess what I'll do? I'll sell a lot of premium. Okay. Does that mean I want to call the tops right now? No, because I don't know if this market is getting into like euphoria. Maybe it is. Part of 2024 felt like euphoria, but apparently not. So anyway, Russell. The Russell is the one index that I like it for income trades. I've got some ratio spreads and some 1-1-1s out here to March and May. I don't know how bullish I am at these levels. I'll probably just continue to monitor this for income trades. Dow, same thing. If we have pullbacks, I like the Dow. Qs and S&P, always trading those. So volatility index, we're at 1477. Historical average around 16 or so. If we're in lower volatility, which I noticed today, like lower IV, I'll kind of wait things out. VIX 1 day, way down. If I'm doing any like zero DTs, I told this in one of my services, I like to see the 1 day at like 10 or better. We're down to 7. Like this is crazy low. So I don't know if this is building up for something where this all of a sudden has a big spike. I'm not sure. But either way, like we're definitely feeling like a lower IV environment right now. And SPXY, I wouldn't do anything with this until we have a big spike in volatility. If this dips hard, then I'll buy it or I'll sell some premium on it. Dollar index, like I said, is dropping. Dollar index dropping is good. I hope yields follow along with it, but they're so far resilient. Like yields haven't really had any follow through since last week. Oil hanging in there right around that 200 moving average. This is a wait and see. If oil gets smashed all the way back down, unfortunately, this was a more pronounced fake out, but that was the bull trap. That was a bull trap. And now oil is getting talked down and jawbone pretty hard. So I'm not sure what we're getting on oil. I wouldn't be looking to get long necessarily. I think if oil comes back down to support, okay, fine. Maybe it bounces there. But again, defined risk trades, I just don't have a trade in oil that I like. Gold and silver, I still like. Gold has been outperforming. Natural gas still hanging in there. Actually, let me look at URA. I've got some uranium plays, and we're at 30.61. We faded a little bit off the highs. I'm trying to get a chart alarm break at 34. So I do have a long call in uranium that I might look to sell it. Let me see what the look at URA. Trading at 53.6. I've got a couple plays here. So URA at I have some shares of URA that's up a little bit, not much. And then I've got a long call out to next January. So I'm pretty much doing this as a leap, which is a long dated expiration. So I've got the $22 call that I paid $9.59 for it. So, and I've sold against it a little bit, but I'm going to go to my tracker and figure out. So 22 plus 9.59. My break even will be 31.59. Let me see what my tracker shows. So URA, and that's not like I'm lining up an insult. Okay, buy shares I have. Okay, there we go. So the $22 long call, and my break even is now 9.44. So let's see. I'm gonna look out. I mean, if I get it called away, how many contracts I'm in? 1, 2 contracts. Okay. So if I went out to March 21st, I mean, I could sell the 34. I mean, I kind of like the 20 delta. I get 50 cents on the 35. The good part about this is I can still lower my cost basis going out to March. That's not that far away. My job is to lower the cost basis. The bad part is if this gets a move to the exactly, if this gets a move to the upside and we break above 34, I think that uranium could be way, way, way more bullish than this. And so I don't necessarily want to be aggressive on selling. But at the same time, it's like, let me look at it from an income standpoint. If it gets called away at 35, I can do the numbers on that. So 944 with a $22 long call. Okay, so if I did $22 plus 944 minus 50 cents on a sell call that I could take right now, I would get it called away at 35, make 200 shares. I make $800 by March. It's okay. I can reestablish a position. I might just end up buying 100 shares and then doing a collar trade. That might be better off than trying to play the timing of a long call and a leap. So I think what I'll do is I'll lower the cost basis right now with this. This is a March 21st monthly expiration, and do the 35. I'm going to sell this against it. So I'm going to do 2 contracts here. So I have my long 22. I'm going to sell against it the March 21st at 35 and let me try to get 50 cents for this, hopefully. Got filled at 50 cents. Okay, good. Just let me do a quick spot check here. Do I have any of these accounts with URA? There we go. Same thing here. So I will sell the 35. I think they all have 2 contracts. Okay. Let's go 35 times 2 for 50 cents. Filled. $35 for 50 cents, 2 contracts. Filled. Okay, this one is okay. I've got a slightly different break even on this one, so I'm going to track this real quick. I'm going to update my tracker. So URA updated tracker. The January 2026 22 long call is now selling the 321 expiration, $35 sell call for 50 cents credit. And that brings me down from a 944 okay, so 944 down to $894. Okay, so that would be a break even of $894. All right, and then I have this one with the $20 call that I paid $12.40 for, and I need to do a break even on that one as well. So I've got 3 contracts in that one. Bought the 20, paid $12.20 for it, $32.20. I'll do the same thing here. I'm just going to put out that's 3 contracts. So what account? Okay, this account. Let's go 35. Try to do 3 contracts and try to still sneak in my 50 cents if I can. Now it's filling at 40. Oh, come on, man. 49 cents. Got filled at 50. Okay, good. Okay, and then sell 321 expiration 35. Sell call for 50 cents credit. And that should take my overall debit down. So 1220 minus 50 puts me at 1170. Okay, so I've got a couple more accounts to get this in. Same thing here. Okay, so I'll sell. This is 3 contracts. 35. 3 contracts. Filled, no problem. Yep, I'll get there. I'll get there for gold and silver. Just give me a second. Let me get these all finalized here. This one's the 22. Sell 2 contracts. On that account, 8051. Okay. I don't think this account has any exposure. This one is new. This one, the $20. Okay, so this one's going to be 3 contracts at 35. 2, 3. Okay, so those are all updated. Now I have debits of 894 and 1170, respectively. If they get called away, so I've got the 20 at 1170, get it called away at 35 for 990 a contract, or 990 an account, and then I've got the other ones for around, be 22 plus 8.94, get it called away at 35 times 2. So I make $800, $900 per account, which adds up fine. It's fine. It's not a huge position on uranium, but I'm looking to see, if it's an income trade, it's an income trade. If it's greater than 35, fine. I'm going to set a chart alarm here at 35, which would be, we've got recent highs around 34, but I'll put $35 would be my sell call for a 321 expiration. There. So if we're up above these highs. So this is the reason I'm in uranium, is for a nuclear play. One's all gung-ho about AI and infrastructure and energy. Look, if we don't have better energy on the grid, if we don't have the ability to sustain the energy suck that is coming from AI infrastructure, we're not going to have it. So this whole boom in AI is going to require energy. And, Trump talked about coal yesterday. Well, coal's not really cutting edge, but it's cheap and it's clean. But I think there's a much bigger push into nuclear energy. It's a lot more popular in Europe right now. But if the U.S. Adopts it, I just think like solar and wind, it isn't really doing much. And also, if you ever drive in the middle of the country, like Midwest especially, it's just turbines for days, and a lot of that gets shipped out. Like I know I was just in the Midwest last week, and in Indiana, most of the state of Indiana has wind turbines, and those get shipped to New York. So it's not like the state itself. I mean, it's a subsidy, but anyway, I don't think that's enough to like power the grid with wind. So we'll see what happens, whatever. But nuclear, if we, it's mostly a supply and demand game too. It's like it is, uranium is in short supply, and if there's a big demand for it, then price gets expensive. So we'll see. I could be dead wrong as well. There's a lot of volatility, but like I said, if it gets called away on that diagonal spread, so be it. Otherwise, I might just own the shares, keep the shares, and then do a collar trade around it. So that might be what I add to here, because I do have some shares already. I might just allocate another 45 shares, so I have 100, and then have the ups and downs protected. So there's that. All right, what else is going on? Gold. Let's take a look at gold. Hey now, look at you, gold, just killing it to the upside. Gold is at a nice little rally, and gold is up around 7%. Again, we're kind of back in the same situation. Like, where is the S&P for the year? Oops. S&P for the year is probably up like 4%. Yep. So S&P is up about 4%. Gold is keeping pace. So gold started right in here in January, had a bit of a pullback, but we're talking from a daily candle. That is a trading day. That's the 31st. Okay, so gold started right here, and gold is up more than the S&P. It's kind of telling. I still am not crazy bullish on. I am bullish on gold, but I'm not buying these highs. I think that a run to the highs is great. I think that if it continues to go higher, I will probably just participate in the additional melt up. But I would say same thing. We have a low, we have a low, we have a stretch away from the 200 moving average. We have a long bar count that hasn't been tested in a while. And I wonder if this is going to build at all, right? Will this build into any type of consolidation? You know, everyone might look at this and say, I think that's a rising wedge and it's going to fall. Maybe it does. But if it stays bid right here and we just break out, I mean, I'd almost love to see what people would say, like, oh, it's a triple top. There's no such thing. So if it just hits resistance, I'd look to say this thing breaks and goes. But I hope there's a little bit more of a time factor here that you can just see. There's times to build, there's times to accumulate. I am not going to chase gold at all-time highs. Okay. All right. Anybody that says in the comments, Trump also said or Trump said, just take that with a grain of salt because Trump can say a lot of things. The question is will it get done? Right? It's called pandering. And right now he's got a very supportive base that is extremely loyal. So what he says is kind of taken as gospel. But he can say something, but it may not get done. And I think that's like the reality check that, you know, we want this, we think this, we're trading on hope and optimism, but if stuff doesn't get done or doesn't get better, what difference does it make? It's just talk. So call me a skeptic. I think it's harder to turn the Titanic um, than it is like instant. The government has never been instantaneous, right? And when it was instantaneous, everybody questioned it. COVID vaccines, that was instantaneous, and nobody thought it was real. So I don't think things are going to work that quickly. So we'll see. All right, gold, silver. 32.25. I'd like to see silver catching up. I still check this chart XAU versus XAG, and gold is outperforming. Now, for right now, I'm curious if gold ends up hitting some resistance and then dropping. They could still both perform to the upside. Silver could be up, gold could be up. But if we are hitting resistance here, maybe silver gets a little bit more of a bid over the coming month. We'll see. Okay, Bitcoin still hasn't broken out of recent highs. I could see another range here. Right? I mean, look at all these trades. We have S&P at all-time highs, NASDAQ not at all-time highs, Dow not at all-time highs, Russell nowhere close to all-time highs, Bitcoin hasn't made all-time highs, oil is retracting, gold is sitting near all-time highs. I just think a range is doable. You know, and if I'm wrong, then I guess this is the same story as 2024, and this is just going to go up and it's a bull market, easy peasy. But I don't think it's that. You know, I think it's going to be a range. So if Bitcoin can't make new highs right away, then we trade the range. If the S&P starts filling some gaps, okay, fine. We get ready for that. If the Qs fill some gaps, okay, get ready for that. So it just feels like we stepped right back into 2 weeks of trading. And it's like euphoria all over again. I'm not buying it. So I put on 2 hedges this week. 605 by 585, and I've got a 590 by 570 on the SPY. They're cheap. It cost me like $4 to make $20 and $4.75 to make $20. I could be wrong, but it's like the reward to risk is good if I'm right. If there's any type of correction and backfilling on those gaps, IBIT, same thing, like to the all-time highs, like close to them, but not breaking through. I still think Bitcoin is a favored asset for this year. If we have lighter crypto regulation or looser, or I say a little bit more. I mean, we needed regulation, right? We needed regulation in the crypto space. We need to stop the scams. We need to make it more legitimate. I mean, BlackRock with his hat in the ring, making ETFs, those are good. I think Bitcoin is still like a great play for some speculation. I could see a 125 or 150 Bitcoin this year. I hope we have a range. You know, I hope we have a range to at least, you know, I want to add some more trades. So if we go high, low, equal high, equal low, I'd like to at least look at this as an opportunity to go long with credit spreads or add some more shares or go long with some type of income trade and maybe stack in a couple of income trades here. So I will be watching that. MicroStrategy, 373. We are pulling back a little bit. I still have it covered at 310. Still looking for income. Still watching my debit levels on my collar trade. I now have this where the accounts that I'm in will hopefully give me, it's like, I want to say it's close to $3,000. So my cost basis should be down to like 274. Let me double check that right here on my tracker. So MSTR, my tracker is down to 274.36, 274.36, 310. Yeah, I mean, I make 35.64 on, I've got 3 of my portfolio margins account in it. So that's $10,600. And I'll probably do it again. I'll probably just, if it gets called away, I'll do it again with the same idea. Let me try to make a couple $1,000. And let's say on MicroStrategy for income, I could generate, I don't know, maybe 20 grand, 25 grand in income on a couple of accounts. It adds up, you know? Okay, Chandler, I saw your comment there, 11:15. Just let me know, unless you said he's not coming. That's fine. Will you send me a quick message in the chat? I'm good if I need to get off at 11:15, no worries. Okay, coin heading higher. Okay, all good. Ethereum, fine. My trades on Ethereum were all profitable, which is nice. I was trading EETH for some credit spreads and some ratio spreads. Japanese yen. So the Japanese yen raised rates last night, and I did put in my Japanese yen debit spread. So I'm out to September. This is a debit spread that I'm risking about 687 for a profit of 1187. And if we pull back, I will say this: I would like to see some more option expirations on the Japanese yen futures. I don't necessarily want to stack up a bunch of trades for September. I'd like to see, does this possibly go out farther? So right now, 6J goes out to September still. I'd like to see an October or December expiration to then throw some trades in there. I'd like to see a 2026 expiration, right? I priced this one out yesterday on FXY. That's a Japanese yen related ETF. I still have shares of FXY, and I have a leap on FXY that's long, but it was not worth taking on a fresh trade. So I still like Japanese yen futures. I just want more expirations, and I'm a little disappointed that I'm not getting more. So I'll wait. But I'm looking at this as, you know, despite them cutting rates, the Japanese yen didn't really show any strength last night, and we'll see if there's anything more to that. But I would be looking at, if this is a high, lower high. I mean, we could just do this, right? We could go this swing, this swing, this swing, this swing, falling wedge, and the Japanese yen get ready for most likely a squeeze. You know, the hardest part is trying to time this thing. But if we come back into this level, do we have intervention levels on the Bank Japan? I don't know. You know, if so, hopefully I get that right timing wise. If not, I hope I can go out farther. That's why I'm trading FXY, because I can just buy the shares. So I do own shares of FXY, and I've just been slowly, lightly dollar cost averaging into that for a couple $1,000. But I'm holding out to see, like, if something breaks in the Japanese yen over the next couple of years, then I'll make a lot of money. You know, but I'm not trying to be super time sensitive, because that is a very tricky basket to time. All right, all good. Yeah, I'll be ready at 11:15. No worries. Okay, Nikkei still choppy and sideways, still garbage. Here's FXY that I was talking about. So I've been long since this dip here back in like the 50s. EWJ is Japanese yen. That's looking better. I've got some exposure here, $1,500 at 71, only a couple bucks upside down. DAX pulling back for the first time in a while. This is another like big old surge. I wouldn't be shocked to see, with this stretch away move on the DAX, that we are going to have some type of pause, and these moving averages have to catch up a little bit. That is a aggressive run on the DAX. So at the very least, you know, pull back to this high, find some type of efficiency before the market can buy a dip. So I don't want to be bearish necessarily, but that's a big run right out of the gates that I think has room to fill. You know, we did hit the 200 moving average back in August, so that's not necessarily the bar count that I'd be after. But I do think a pullback would be sensible. FTSE, you know, up to some all-time highs again, probably some range trading here. Argentina, I'm looking to see if we can find some moving averages. China, flat, but man, it'd be nice to see the Hang Seng give me a bullish pattern. If this is any way a bullish pattern and we can break this neckline, I think that March, we'll say like Q1, if there's a decent amount of believable stimulus coming out of China, added money supply, propping up the property markets, stabilizing the capital markets, China still has some potential. You know, this swing got the market all excited. It's just a matter of, will this area offer up the bottom and follow through? If it is, like, 2025 could have a nice run on China. And, maybe I'm one of one traders that actually care about investing in China, but I don't think I'm alone. I think, Michael Burry had some exposure in it last year, and I'm sure there are others, but I like China for the potential asymmetry. There's not a lot of stocks I can look at like Baba and Baidu that have, measured moves back to the last couple of years where I'm like, this is a 100% measured move. Not a lot of stocks I could look at for the US and say, I think this could go 100%. But with China plays, I'm like, I just have to figure it out. So I did write down, I was doing this yesterday in one of my live sessions, a 40 by 95. It's a little costly, so I'll probably hold off on it for right now. But I was looking at doing like a 2-year leap and then selling against it and trying to generate some income. But it was on Baidu. So Baidu is trading at 83 and change. I have some credit spreads in. I have some 111s in. The 111 and ratio spreads were a little light on the profit side. So I was opting for more of a, how could I invest that would be cheaper than buying the shares and also have a nice little income trade in the near term. But this is what I'm talking about as far as a measured move. If this bottom in any way, shape, or form is going to become like a falling wedge and this thing holds, if this thing starts to rip, I mean, that's the upside that I see. So basically we have like an $80 stock that could go up to $160, just like it did here. And all this has been is just the slow bleed where this thing has just been oozing blood slowly but surely for the last year and a half. But if we come out swinging where China's like, we're going full tilt on stimulus, maybe. But I do have some exposure in that, and hopefully we'll see something, to the upside at least. FXI, I cut my exposure on FXI and KWeb. Those were profitable during that September rip. The only stock that I have right now as far as exposure in China is Alibaba, Baidu, and JD. And I'm hanging in there right now on all those. Schwab Dividend, Schwab Growth, have some exposure on all those. Advanced decline line has changed a lot in the last couple of weeks. So we were down to only about 14, 15% of the S&P above the 50-day, and now it's back up to 52%. So we have quickly returned where that correction has now been fixed, where a lot of stocks are back above the 50 moving average and still above the 200 moving average. So there's how many stocks are above the 200. So we have 60% of stocks above the 200, and we've returned to 52% above the 50-day. So we're now in what could be labeled as like a bull market again. Is there follow through? I don't know. I would think based on the indexes, like maybe, but really it's just bad stocks that have been underperforming or just playing catch up. You've had 10 stocks carry the entire market for the last year. Throw in some semiconductors with some volatility, but mostly it's been Mag 7. Now stocks are catching up, but they've been underperforming for so long that we're not necessarily dragging indexes higher. NASDAQ, same thing. We went from 16, 17% above to now 53%. All right, take a look at some other stocks. Costco, Walmart. Ooh, Walmart's up. This one is a collar trade out to March, trying to get over $100. There is my $100 for call away. Nike up off the lows, which is good. Home Depot and Lowe's will be watching for earnings in the coming weeks. MasterCard and Visa also have earnings in the coming weeks. Holy shnikes. And I'm glad I got out of that bear call spread. I was in a bear put spread. I got out of that trade. I think I paid like $1.95, closed it out for $3.75. And I'm glad that I did, because that is off to all-time highs once again. So yikes. It's everywhere you want to be. MasterCard back up towards the highs. Amex up to the highs. I was looking at this as an earnings play because earnings was today. We beat revenue by a very slim margin, and earnings per share up a little bit. So we were trading at 318 for the week, and I had posted this just as a hypothetical. I was considering an Amex play on volatility, and it's gone nowhere. So we were up as high as 326, but it did not get to 338. The expected move is around $20. So I saved myself the headache of getting a losing trade on earnings because we didn't go the expected move. So did it go to 338? Nope. It topped out at 326. Did it go to 298? Nope. We're at 316. We're essentially right where we started for the week. Okay. Johnson & Johnson off the lows. I've got a leap out here at 140. PGR, possibly some assignment. We don't have earnings until April. But I have a ratio spread, the 230 by 225. This is a fairly low volatility stock, so I don't know if I'm going to get assigned. If I am going to get assigned, I will repair it for hopefully $1,000 or more. CB, same thing. This one had a really high implied volatility, so I did a 111. So that's a 201 credit with a profit trap. If I'm willing to own it, it's going to be down to 207. This stock would have to drop a boatload to get filled and assigned. So it's unlikely that will be the case, but I'm still watching that one. Palantir right back up towards highs. I'm not chasing things at all-time highs, but I am generating some income, so we'll see how it plays out. If there's any type of range on Palantir, if this goes high, low, any type of range like so, I will probably add more like a June or July 1-1-1 trader ratio spread. If it goes higher, okay, fine. I'm not in Palantir. The shares that I had, I dumped, right? Everything's been credit spreads, ratio spreads, income, and good income on Palantir, but man, I could not own this thing to save my life, even though I tried to. But I just refuse to buy it at highs when it's at like a 200 price to earnings multiple. Carvana, another big buy the dip. Who cares? Redfin, Zillow, markets, sectors. Let's take a look at the 10-year really quickly, and then I've got to go here in just a minute. So US 10-year. So US 10-year. What's going to be a good sign for the consumer? What's going to be a good sign for the equities market to justify higher highs? The 10-year probably has to break these lows and go lower. Okay. Now, the question is, if the 10-year goes lower, will the Fed change their probabilities of rate cuts this year? I don't know. I mean, look, this is where the Fed started. When they started to cut, we were all the way down to 3.7 on the 10-year. So right now, why would the Fed cut more unless we're already back down to these levels? Like the first time in history, the Fed cuts rates and the bond market does the exact opposite. So I think the Fed needs to tread lightly. But I'm not the Fed. I just hope for the sake of every consumer in the country and every business that needs to restructure debt, I'm hoping that we don't go higher on the US 10-year because everything gets more expensive. And next week we are going to have inflation, and we're going to have the Fed on Wednesday. We're going to have earnings with Mag 7. It's also going to be the first month of the year. So buckle up, because I think the market could finish on a high note, and then February could be a little rough and tumble, maybe some efficiencies and backfilling of some of these gaps we've seen. All righty. All right. Any other charts, any other questions? Let me double check really quickly on the alerts. So I put in a new trade this week on Airbnb. We closed out Netflix for profit. Put in a new trade on Apple this week. Let's see here. I know I put a hedge trade in. Let me check my other positions. I put a Forex trade in for Euro Swiss. I'm long Euro Swiss right now. That one should be looking better. I'm just stacking up a bunch of orders. Let's freaking go Euro Swiss. Okay. So similar to what I did on the dollar Swiss, stacked up some orders. If I have pullbacks, I'm getting them. If we're staying long, I'm stacking in, and I'm trying to take profit at a pretty safe spot around 98.80. I would love to see this thing back up to 1.00, but I'm not greedy. If I get back to this level, it's easy to see. There's a pocket up here. I will get out right before that high at 98.80. And if I stack in another 1, 2, 3 trades, this number just gets bigger as far as the units and dollars. So if I have any pullbacks, I will probably add on some pullbacks and trendline breaks as well. But the nice thing is we're getting, I mean, are you trading in the dark? I'm not a dark mode trader. So turn your brightness down if it's too bright. But I don't like the dark. Yeah, Swiss pairs are looking, so Swiss is looking better. Euro Swiss, this is fine to see a nice daily candle. Hopefully it stays above here. And if we start to shift this thing back above the 200 moving average, that's good. All right, pound Swiss. Also looking good. I'm long pound Swiss, and first target would be back to these highs at 16, but I'm trying to get this trade. I'm long all the way back towards this low around 1.2. So 1.2 is my target, but I'd be happy at 1.19 to 1.1950. That would be good enough, and I'd be trapping and trailing profits into there. But yes, I'm long. Look, if we have this low to high and this thing is sideways, if we break above here, measure it up to that point, measure symmetry, and we're probably pushing to that 118, 119 handle. So I'm going to stay long against the Swiss, enjoy some of that 2-year carry that I've been enjoying, and hopefully see a lot more profit to roll in with the pip movements as well. So Aussie Swiss looking better. Okay, still a long ways away from my profit target. New Zealand Swiss looking better, still a long ways away from my profit target, but Euro Swiss looking better. CAD Swiss oil's been dipping a little bit, so CAD Swiss still has some room to run. But again, if we break above the 200, it's a decent measure move, low to high, symmetry right there around 6,500. Big pocket at 7,000 as well. Euro Swiss looking way better. Pound Swiss looking way better. Okay, and then dollar Swiss has been closed right up there towards the top. I've been against the Swiss for 2 years. Okay, part of it's technical, part of it's swap. So there's positive rollover. But yeah, I've been long against the Swiss since the end of 2022, which was early, but all of 2023 when we had positive carry in the markets. So it has been a position / investment for me the last 2 years. But it pays. Like dollar Swiss paid out really well. I know that it took a couple years to finalize that position, but it paid really well. Euro Swiss, same thing. If it gets to my profit target, it pays really well. The other trades that I've got measured, it pay really well. On top of that, holding those positions didn't cost me anything, right? I just wait, but that's part of how I trade. Okay, that'll do it for today. Thanks, everybody. Is James on next? Not sure who the guest is, but whoever it is, Godspeed. All right, thanks, everybody. Have a good weekend. Bye.
Trading is hard, but trading by yourself is even harder. This year is your year to join a trading community. The A1 Trading VIP Discord community is made up of thousands of traders around the world committed to helping you learn and to find better trade setups. Inside of the Discord, you can browse Trader Nick, Frank, and Ivan's trades on all things Forex, stocks, options, and ETFs. You also get exclusive access to Ivan's live coaching webinars, where you can learn from a seasoned professional in the industry and even ask questions during the webinar. We also have chat rooms filled with traders who share their thoughts and analysis daily. It's a space for both veteran and new traders alike to come together over their love of markets. Want to take it a step further? Upgrade to Pulver Alerts, where veteran money manager Chris Pulver shares his daily options and stock positions. All things A1 trading are happening in the VIP Discord. Start your new year off on the right foot and join today.
All right. Hey guys, how you doing? It's Dr. Greg McLeod from the Elite Traders University, and we are going to review some charts. If you want me to cover something in the chat box, I'll love to hear from you. It's so good to hear you, see you. Happy Friday, fabulous Friday. Let me go ahead and share my charts here. Okay, and there we go. And share screen and add 2 monitors. Yeah, okay. Boom. Okay. And entire screen. Here we go. All right. Good morning to you guys. We're going to start off with the dollar index. Again, my name is Dr. Greg McLeod over here at the Elite Traders University. And I'm primarily focused on the Forex, but a chart's a chart. You know, I use Heikin-Ashi charts and quarter lines and some Fibonacci and stuff like that. So I'm going to start with that. You know, we've had some incredibly low volatility. You got, you know, considering we had inauguration and a holiday, and so I was talking to the brokers and I said, you know, the spread's kind of wide. I don't know if you guys have noticed, the spread's been kind of wide, and the market action has been kind of choppy, especially if you're a short-term day trader. I'm a short-term day trader. I'm a scalper. I don't have any long overnight positions. I don't like them. I kind of lost my butt back in 2000 internet bubble. So I learned and perfected scalping, going in and out of the market very quickly. But I do look at long-term trends in order to determine what I'm going to trade. In fact, I look at the DXY because when I trade the major currency pairs where most of the volume is located, I like looking at what's going on here on that those higher time frames, and then dropping down to smaller time frames to execute my trade. So we can clearly see the DXY has been on a tear from October up to a peak in January, really. But we're some type of a pullback. You know, nothing moves in a straight line, and we have a pullback to probably some type of Fibonacci support here at the 23% retracement. So we're seeing a little reprieve in the dollar. U.S. dollar coming down to that 23% retracement. I have my red line is my 38% retracement, and we have some support here that we had back December 2024, and consequently, even though we have a strong we had a strong uptrend in the dollar, we're in correction mode now. So what we've been seeing is leadership coming from the pound dollar up 1.09%, the euro dollar up as well, Kiwi dollar. So everything's basically sell dollar. So the whole buy dollar trade that was at the very beginning of January, we're having this this sell dollar, buy everything else, right? One of the trades I found that was extremely successful was getting a short dollar CAD and moving down to like something like this. Like this is when you see long wicked candles like this on the 1 hour, 2 hour, 4 hour. That's illiquidity. There's not a lot of volume, and so you get these really these incredibly quick, fast moves on the shorter time frame chart. But we're forming a basing pattern here on dollar CAD, and that 38% retracement is holding. We might drop to that 38% retracement. That's a little bit farther down, and we could see this breaking out to a bit of a flag pattern, flagpole consolidation, lots of consolidation. We're going into February. Seasonally, February is the worst time for the stocks. I look at the stocks as my signal to look at to trade the currencies, and if we have this sideways consolidation going into February, we can see the dollar rising, and then the other currencies falling, and we also can see the indices fall as well. Back one of the if you ever heard of a man by the name of Jeff Hirsch, he had a book called The Stock Market Almanac. In fact, he talks about the performance of the Dow Jones Industrial Average over 63 years. In fact, it's now 12 years beyond that, but this pretty much holds. Where we have the worst month of the year is February for trading. And then the next, not the worst. The worst was really September. But right now, usually after a big run, we have our October, November, December, big runs in the market. November is like the king. November and December, Christmas rallies. We have the Santa Claus rally, and then there's a sell-off. There's an anticipated sell-off in February. Now anything can happen. Seasonalities can be funny. Correlations break down and everything like that. So we can, but what we can look at is, looking at this dollar continue to plummet. Then we have that 38% retracement at 106.21, which could act as support, and then cause a reversal in our major currency pairs. Okay, so we have walking it down to the pound. The pound's been very strong today after a very long decline. When we start walking it back from our daily, we're getting a little bit of a price from the from this long channel that we've had, right? So basically, we have a trend channel. We're rallying up against resistance on the daily chart. Currently at the 1.248. Going into a Friday, we could, everything we've hit the top of that channel, we usually see some type of reversal. I would just look for a trend line and look for a break. Again, my trades last very, very short term. In fact, some of my students, their trades have even last like seconds when we're trading like NQ and some of the indices. Okay, so in fact, all these things are going to look the same. If you have a currency pair you'd like to take a look at, let me know in the chat box what you'd like to take a look at. Let me go ahead and remove all this, remove all drawings. Right. Again, we have a similar pattern in the euro. The euro is the anti-dollar. As the dollar has been going down, we see the euro making a retracement in an overall downtrend. This downtrend goes back pretty far. So we've been kind of cascading down, making lower lows. But what I usually do is look at the last high, put a Fibonacci on there, and I expect that, maybe we get a rally back to the 38% retracement to typical target, maybe 105.87. Then we'll probably top out and resume the trend. But hey, I don't want to fight the trend. We do have an upward channel, and we have a Fibonacci, so we could probably get that to 105.87. Continue this rally, but it's forming a bear flag. And every time we've had a bear flag, the bear flag breaks like a hockey stick. You call a bear flag, if you're from Canada, it's a hockey stick, right? You got the long rally, long descent, and then a rally against the trend, right into a value zone, and then we drop, and then we rally up. So it's a nice rhythmical pattern. And as long as the fundamentals of the dollar has not changed, and these are just maybe some type of profit taking of bears taking profits on shorts, okay? And so we have that pullback, right? And gold is another one that's been resuming back to the old highs. We can see a move. We get rid of that. Remove all drawings there, right? And now I'm taking that last pullback, but back here in May 2024, and then we can see that we backed right off the 38% retracement. Nice correction, a nice breather, and then nice little ABC correction, and now we're returning back to the old highs, the high of October 31st, 2024, right? So we got that going on there. And I see somebody, we got US 100. All right, let me go up to the indices. Let's go to some of that good stuff there. Yeah, and we've got lower pullback at US. Hey, Elvis talks about US 100, and they got Nahi. Great, we've got the NQ in there. Okay, so and I also look at stocks too, but from an analysis point of view. But in sector I'm really excited about the quantum stocks. I don't know if any of you guys are into that. I can show you a couple of things that I'm looking at, and they're kind of recovering after Jensen over at NVIDIA kind of like said, oh, they're 30 years away. But he's talking to his book when he wants to tank the quantum stocks. Okay, so let me go ahead and Q. Let's do it. And who moved it? Who moved my NQ? Right? That's we can use this one, right? All right. Again, these are Heikenhashi charts. I checked out of the whole candlestick thing. Steve Neeson brought candlesticks back in 1994. I remember using bar charts and getting stuff at the end of the day from fax machines. But I love Heikenhashi. It just keeps it very clear for me. And we can see that we had a nice pullback here. I'm looking at this wonderful pullback. We haven't made the same high. If we, I love structure. We're making higher highs and higher lows, and then we make this low, and we need to break. I mean, we really need to get over 22,211 here in order to make this, stair step new high. But if we come short, and this thing is hitting a Fibonacci, then we could have an A, B, see you later. Where if we top off at the 786 Fibonacci retracement, or the Fibonacci's of last resort that people don't talk too much about, the 88.6. I call it the smooth jazz, just on the radio dial, 88.6 FM, right? We could stop there, and then we could have some type of a failed move up where we don't get to there. So this is a critical area that we have to look at. Let's take a fib from the top to the bottom, and a lot of people are like shooting for the double top, but it's not really a failed double top, but it could be something like this. Could be a head and shoulders like this, right? And if it may go a little higher, it might be like a Quasimodo, right? So we're looking at this area, supply zone up there that could possibly stop the rally and turn things around, especially if the market wants to give a reason to sell off anyway. they'll probably, whether it's tariffs or, maybe inflation or, number of things, a number of issues come up, but you want to watch that. If we can break this, then we have smooth sailing, because guess what? These are all-time highs, and there's nothing up here that could stop it. But a correction would be healthy. A lot of valuations are getting stretched on a lot of the high tech stocks, and it'd be nice to get this going. So keep an eye on your time, the time frames. Look what's going on different time frames to see if we start seeing structure changes, where we start seeing lower swing highs and lower swing lows, and that's going to be something that could give us a heads up that as price action starts to compress and slow down, the momentum starts to slow. Remember, there's always a slowdown. Momentum slows before price changes. So just like a car has to slow down before it makes a right turn. So as we're seeing momentum slowing at key levels, be careful. Okay. US 100. I'm going to take a look at that. Oh, this right here. There we go. Boom. Okay. Similar, we're topping out too. We got like a double top. This is a 4-hour chart, double top, right? But we had a high. See, this is the same thing that we had in the NASDAQ. Take that fib from the last swing high that we had, the high, all-time high, or was it December 16th? Take it from that high, take that fib down to that low of January 13th, 2025, and now we're hitting those Fibonacci's of last resort, that 88.6, and we're still, you don't want to fight the trend, but look what's going on here. Candles are getting smaller, price action, before we're like very, bullish, and then the price action is getting smaller and smaller and smaller and smaller, right? And we're getting at this Fibonacci of last resort. Ideally, what we want to see is a push toward 125 and beyond, right? And I would just draw a trend line and look for some type of a structure change, right? But right now we do have a very strong uptrend, and we can like play the range if you're like in this. I'm still a buyer. I'm not a hero. I don't throw myself on top of a hand grenade. If I see red, I see green, it's up. And if I see red, it's down. And I see green, so I'm still a buyer. I'm a buyer until I see red, and then I'll switch. But right now we've got, we filled, this is a huge gap down, and we just filled it. So we just filled it right there. We got this supply zone right here, right in there, and we're just like hitting up against it. And it's kind of all lines up. We're going to month end. We're going to go into February, and it's kind of like, kind of hum a few bars and I can fill it in, kind of play it by ear. It's getting kind of lofty up there. And so I could see this rolling over. And if it did, it would be healthy. But, from an Elliott point of view, this would be maybe some type of a leg down, complex A, and then a B leg up, and then a C later. We call this an A, B, C later. Right. And, see you later, maybe come back. Be great if it came back. Maybe we go to even find the last critical drop that we had, which was back in August. And I usually use that as to anchor my fibs, taking a fib from there to the top there. And we can see that, 38% retracement. Kind of hit that already, right? Maybe we can, be nice to have that big of a correction, but I believe we're getting to areas that are very, very lofty and could provide some great, pullback opportunities or short selling opportunities. So, don't, be aware. I know they tell you it's suicide to pick tops and bottoms, but there's some Paul Tudor Jones. He made all this money trading the turning points, right, rather than the meet in the middle. So that is something that you want to look at. Cheers for Finland. What are benefits of Heikin-Ashi charts? And that's Jirki. Hope I didn't pronounce your name incorrectly. It really smooths out Now it does a little calculation which smooths out the if you compare this let's go to let's go back, let's go to the S&P 500, right? I mean, when I keep things really simple. I like colors and shapes. Like I tell my kids, my students, they count to 5 and you know your ABCs, and you know your shapes and colors. That's all you need to know when trading this market, right? So I keep it very simple. In fact, I've had people like cuss me out because I'm so simple. It's like, yeah, but you're up 94%. So why do you want to make it complex? I keep things really simple. I taught middle school and high school in South Central LA. I taught gangbangers how to trade, right? And so they would ditch and come to my class. And so I kept it really simple. But green is up, red is down, And I draw a trend line across the top. When this breaks red to green, I'm long. Real simple, right? So it smooths things out. I don't have to worry about the thousands of candlestick patterns, like morning star, evening star, 3 black soldiers or 3 white soldiers, 3 black crows, piercing lines. It's just green or red. Now, I might sacrifice a little bit on precision because there's a calculation that does actually smooth this out, takes actually an average. But my results have been very, very good, right? So it just really, like, if we go back to like standard candles, candles, there you go. How about that? I got a green one, I got a red one, I got a green one, I got a red one. It's like, I checked out of that world. Yeah. So boom. So I've been using this since 2013. Okay. And anybody else? Anything else that one I'm really kind of excited about. Let me show you a couple. There's a couple of stocks, that have kind of a quantum computing sector, and there's a couple of ones. Rigetti is a really good one. These are like these are like really high power. Now we're making when the that quantum computing was 30 years away. That's where we got this drop, right? Because of course, quantum computing. Well, the chip is so fast, and I'm looking at that. He's talking his book. It's a threat to NVIDIA, right? He says, "Oh, it's 35 years away," or something like that. Then Microsoft drops their chip and says, "Look, we got a quantum chip too." After Google dropped their quantum chip, and we have this rally. So I think everyone's talking about AI. I think the next wave, like this is like the internet in the 90s. Like, hey, we got this thing called AOL and CMGI, and it's like, really? So I think this is like really early, and it's kind of risky. But I mean, some of these things are up. They move, right? Just looking from a Elliott wave perspective, I'm looking at big crest wave 3, of pullback to 4, maybe back, and so Rigetti is one I'm looking at. QBTS one as well. ARQQ. They're all forming like the same type of pattern, but again, these are all taking hits after the NVIDIA CEO came out and said that quantum computing is 30 years away. But the run-ups have been incredible. So just keep your eye on that. Not saying like go put a bunch of money on them, but they're very, these remind me. I'm old enough to remember, the start of the internet and those stocks and how no one really thought about anything about them or heard about them, right? So this is, I think, is probably the next wave out. If you're interested, they're called the quantum stocks. I just create a quantum list, and I keep an eye on them. Some of them are optionable, and some of them are tradable. But some of them have, some of them actually, if you look back, go back to like weekly charts. They've been around since the 90s, and they were like maybe like $6,000, $7,000 a share. Give us a QMCL, yeah, like So it fell, but it's coming back, right? And so technology has been there for a while. So this one goes. This thing was massive, right? Had a high of 6,871, and money's being poured into it. Oh, Nikki wants to see Aussie yen? All right, sure. I got Aussie yen for you. I love Aussie yen. Let me Forex yen pairs. Like, I'm all kind of organized here. Here we go. What do you want to see? A weekly chart. And always the bank has been rumored to raise rates, and we can see that we've got a problem here. We got a really lower low here, a lower high, but we're forming a triangle. We have this indecision here, and I don't like questions, right? I mean, we could break out and go north, because why? We have this, we really haven't broken. We have higher highs and higher lows. Structure wise, we would need to break, 90.25, but we've got this consolidation here. Right here is this at 96.26, which looks bullish, constructively bullish, with higher highs and higher lows from this point, right? And so we have resistance coming in at the top of that range is 102.58, right? If banking on Bank of Japan, people are waiting. I mean, I had new guys who were trying to short. They can't keep it going like this. Is eventually going to go, and they got wiped out fighting the trend, and then finally it dropped, right? They didn't have any capital. Remember, the market's going to remain more irrational than you have capital. That's more than you can say liquid, right? So you got to go with what you see and not what what some economic guy tells you. The charts are your footprints in the sand that tell you what is actually happening in the market. What is and not what will be. But looking at here, we've tested. This was the bear's best option. They pushed price below 95, got down to 89. Buyers stepped in, bam, in your face, rejection, boom, right? Green candles, bears not finished, push it down, boom. But they could not make a new low. They made a higher low. So they're a little scared, like they fired their best shot and that's all they got. And now we have what we call, Toby Crapel wrote a book called The Opening Range Breakouts. And you talk about the narrow range. We have 1, 2, 3, 4, 5, 6, 7 bars of consolidation. Usually we'll see some type of a breakout, a resolution from this daily dojis or weekly dojis, right? This has been weekly. It's been dojing for a while, right? Not Doge, not Department of Government Efficiency, but doji. Which means that it hasn't gone anywhere for a really long time. But if you are a scalper, this is great because it's a predetermined range. You're a range trader, you buy the low, you sell the high, you scalp it, you get in and out, boom, in and out, boom. So it's been a beautiful trade for a scalper. All I need is to get from here to here, and if it bounces toward the low, I'm buying. And if I'm getting down to like a 5-minute chart, I mean, this is what we live for, right? Right? I got a nice little double bottom. I get long 782, right? Get top of the range, 98.57. You got 30 pips there, and then you're done, right? So it's if I'm a short-term trading, I'm just scalping it. It's has not been able to break. It's making higher lows and higher highs. And so I would look for this to maybe head back toward the top of the range, 98.88. Thank you for your questions, Nikki. And anybody else with that? Okay. Well, guys, I want to thank you so much. Am I good for time? How are we doing? Okay. Okay. The cadmium was pretty good too. All the yen pairs have been acting a little funny, you know. We went from this peak high in July, and then the low, but no follow through. After this low, I mean, we just have prices, and a lot of people will, well, eventually, we'll get a break and we'll retest the low. And I don't know. We have an uptrend with the structure has not changed in this, and so I'm bullish. I would be bullish with the yen pairs. Um, Japan is an export nation, and they depend on having a devalued yen in order to export to the U.S. I know that's been the story, and a lot of people think that story is over. It's kind of hard for a story like that after like so many years or so many decades to actually go away, So, all right, Trinity says I can go on. Okay, all right. I'll see. I want to just answer any questions anyone might have. Something that maybe take a look at. And if I don't see any more questions, I'm done. But I want to thank you so much for the opportunity, guys. Thank you for being a hangout for me Friday for a Friday party. You guys have a great weekend. All right. See you later. Cheers. Bye-bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.